Welcome back, value investors, to my channel. In this video, I'm going to be looking at the stock market as of March 1st, 2024. It's been a really upward market that has seen the momentum we saw in the last 3 months of 2023 continue on in 2024. The party and the bull run have continued. It's been fun to see stocks really go up, but are they going to continue to go up forever, or will there be a big correction? That remains to be seen. Nobody can predict it. But I have a feeling that the chances of a correction are real. And I think when the party is over in the AI sector, it's going to be a bloodbath, in my opinion. I'd like to get into what I'm seeing in the stock market, what I think is going to happen in the stock market for big stocks, as well as other sectors and other smaller stocks as well. And I'd like to tell you what I'm doing with my portfolio to try to drive great returns in 2024. My name is Victor. I'm a value investor, and I like sharing my analysis of the stock market as well as individual stock analysis that I have. My intent is just to educate and to help other investors like myself just get a leg up on Wall Street and make a good return for their investments. Do me a favor and like my video and subscribe to my channel if you like content like this. Now, let's get into what I'm seeing in the stock market. Looking at the major indexes, the NASDAQ is doing the best in 2024. And that makes sense because the big push in technology led by the semiconductor stocks has really rallied the NASDAQ to be up more than 10% year to date. That's just 2 months. So it's doing just great. The S&P pushed up by Nvidia, by Amazon, by tech semiconductors like Broadcom and others is up 8.3%. So the big stocks are still really outweighing the S&P, and with their returns it really pushes up the S&P real high. The Dow Jones, which is more historic stocks, the older stocks, that's up 3.6%. And frankly, that's a great return for 2 months. These are relatively safe stocks, dividend paying stocks. So it's good to see the Dow's doing pretty good so far in 2024. Then the smaller stocks, the Russell 2000, made up of stocks that are probably between 20 and 80 billion dollars in market cap. It's up 3.1%, which frankly is surprising. In the end of 2023, the Russell 2000 was really rallying. If you look back at the charts for the last 3 months of 2023, the Russell 2000 outperformed the S&P. And now it's really kind of been muted. It's doing okay. 3.1% is doing all right. If you annualize that, it's doing about 18%, but it's nowhere near keeping up with the S&P. So it continues to kind of give me a hint that maybe there's a lot of good value. I'm a value investor. I'm looking for good discounted stocks. I'm going to continue to look at stocks that are in that Russell 2000. Now let's take a look at the Magnificent Seven, and maybe soon it'll be the Magnificent Six because one of them has really been lagging. Let's start off with Apple. Apple is still a huge company, $2.77 trillion market cap. In the last year, it's up 23%, but year to date, it's down 3.2%, has a PE of 28%. What's the story on Apple? Well, I think that they have not been growing well over a year. They also don't have something new and exciting. Frankly, the mobile phone business, the smartphone business, it's a great business, but they have a lot of good competition from Samsung and even Alphabet with their Android device, as well as others around the world. Huawei is really a competitor for them. So they're really taking a lot of device competition, and I think they're beginning to feel it. They don't have anything new and exciting to put out there and diversify their revenue flows. So I think that's beginning to put downward pressure on Apple, and it's a huge market cap. The next company is Amazon, and Amazon's just doing great. Their market cap is $1.85 trillion. They're up 93.4% in 1 year. Just phenomenal. This year, the rally continues in Amazon, up 18.9%. Their PE is really high at 61.5. So what's the story on Amazon? I think that they're really benefiting from the AI craze because AWS is one of the big hyperscalers. And as companies really want to build large language models and really get into the AI business, they're going to have to buy more services from Amazon, as well as Amazon has a diversified business. And it seems like Amazon's in too many businesses, based on my rule of thumb that you should be a master of a few businesses, but they really do operate well over across the board. We'll see if they can sustain it. That's one of the worries I have on Amazon is, boy, they have a lot of different businesses. And if you look at the employee count, it's massive. That's why I sold my Amazon stock last year. I sold at a big gain, but I'm not participating in the incremental gain. I guess I can count myself as, wise for not being greedy, but it really is a bitter pill to swallow to see the stock continue to go up. The next company is Nvidia, and Nvidia has been incredible, and that's an understatement. The stock is up 239% in 1 year. It's up 70.8% year to date. Collectively, you could have bought Nvidia, I think, pretty much at a sixth of the value that you would have today, just about 18 months ago. So it's just a phenomenal company with the best semiconductor technology right now, the best GPUs in the marketplace. I don't own Nvidia. I think that semiconductor stocks are cyclical, meaning that they'll have great demand for a year or two and then it'll go away and then those stocks will struggle to grow. Will Nvidia experience that? Well, history would tell us that the answer is yes. History has repeated itself over and over again. If you look at Intel, it was hard to believe that that company was once the Nvidia of technology. If you look at the PC business in the 90s, and they really went up in value, but then once the bubble popped in what was the dot-com bubble back then, it took a long time for Intel to get back to its market cap that it had at the high of the dot-com bubble. Now, Nvidia is really in the limelight today. It's doing great. If you were smart enough and lucky enough to buy Nvidia, congratulations. You deserve every single dollar you earned. I wasn't smart enough and I wasn't lucky enough to buy Nvidia. I think the company's phenomenal. I think they're great. I just don't believe they're worth $2 trillion. I think that they're worth maybe a fourth. But we'll see. We'll see if I continue to be wrong and investors continue to be right. Investors in Nvidia continue to be right and continue to make lots of money because they certainly have made a ton of money in 2024. The one stock that I was right about, and it's bittersweet because I'm a big fan, is Tesla. Tesla has a market cap of 635 billion and it's only up 6% over the past year. It's down 18% year to date, and it's down significantly from its high of 2023. And the reason for it is Tesla is a car company, and I think it was trading as a technology company. It's not like Nvidia where it just sells a GPU and they're done. No, when you sell a car, there's a lot of regulation, there's recalls, cars are sold to consumers. You're kind of on the hook to service that consumer. You have to distribute them around the world. You have to run factories. It's just a very tough business. Now, earlier in Tesla's history, I was a stockholder. I'm a big fan of Tesla. I think it's great that they came out and revolutionized the car business. But the car business is over 100 years old. There's some really tough competitors in there, like Toyota, really brilliant people that are really passionate about making cars over at Toyota. So Tesla has to really compete against competitors that are pretty tough, that have capital, really know how to make good cars. And I think they're going to continue to feel that pressure and that competition going forward. So I don't expect Tesla to do very much with regard to stock appreciation. I would not be surprised if Tesla really went down another 20 to 40% in value from this point. Alphabet has historically just been such a great company. Their Google search, YouTube, all kinds of different companies, the Android operating system. It seemed like for a long time they were making just great decisions. And for some reason, over the last year, 2 years, they've made a lot of terrible decisions, especially around AI. And it's really beginning to show. This year, they're down 1% year to date. It's still a big company, $1.7 trillion dollars in market cap. If you measure from 1 year ago to today, they're up 49%, which is a good return. But year to date, it's really showing that Alphabet's really got to pick up their game strategically. They got to get AI right because right now, Microsoft and others are really eating their lunch. Holy smokes. It seems like every press release that I hear from Alphabet AI is bad news, which is terrible. Yet I think that Alphabet has some of the best intellect in their industry and in the world. They also have data coming out of their ears, so they should have plenty of data to work with to provide a lot of AI services. So I'm looking for Alphabet to bounce back. I would expect that they're going to bounce back, but I think they've been fairly well discounted because they've been performing poorly when it comes to execution on AI. I am an Alphabet stockholder. It's probably the third biggest position in my portfolio at this moment. It is a significant position in my portfolio. I believe in Alphabet. I believe that they have just great products. They have phenomenal employees. Historically, they'd had phenomenal leadership. And maybe that's what it's going to take. It's going to take a change at the very top to really reset the strategy and have better leadership going forward. Because I could tell you that for the last year, Alphabet has really, really fallen back on AI. And that's been a huge disappointment as a stockholder. We'll see what happens with Alphabet going forward. Meta has been doing great. Meta's up to a market cap of $1.28 trillion dollars. In 1 year, they're up 188%, and year to date, they're up 45%. So Meta's just doing great. They have a PE of 32.8, and this is my biggest holding across my entire portfolio. The only worry I have on Meta is that it represents quite a bit of my portfolio, a little over 10%. So I'm kind of in it to win it with Meta, and I'm hoping that they continue to grow. They are the best in their space, no doubt about it. And what's really helped them is that they have a position in the AI space. They have tremendous data, they have access to billions of users. They have great technology. They have great people. So I think they're going to capitalize on their AI opportunities. I think they've come out with their Llama large language model. And what that allows is companies to develop on Llama, and it's almost like open source. Yet Meta would have a participation right in that business should other companies develop on Llama. So it opens up an opportunity that really has been there, and it's kind of an accidental opportunity for them, so to speak. And it's great to see that Meta has that, as well as their traditional business, which is their advertising business across all their social platforms. And it's good to end with the OG original gangster company, which is Microsoft. Microsoft has been a relevant leader in the technology space for decades. And more recently, they have controlled the narrative on AI. So just my hats off to their leadership, my hats off to their employees, and I tip my hat to all investors of Microsoft stock. I'm currently not a Microsoft stock holder. I have in the past, but it's been many years since I've owned their stock. They are the most valuable company in on the stock market now. They're a $3.09 trillion company. Phenomenal value in Microsoft. In 1 year, they're up 65%. Year to date, they're up 12%. PE of 37.6. Where's Microsoft going? I think they're a sound business, but it's just hard to fathom that they will go from $3 to $4 trillion in value. I mean, where's it coming from? There's a lot of hype in AI. Realistically, I don't know how much hype, but there's a lot. And I think when AI business models begin to get proved or unproven, then the stocks that have a lot of AI hype priced into them are going to fall behind or fall back. I think Microsoft will suffer some of that. Will it happen in the next 6 months? I don't think so. Will it happen over the next 2 years? I think so. I think over the next 2 years, we're going to begin to see is how real is AI? How big is it realistically going to be? And who are the winners and losers really in AI? It's tough to determine at this point. It's an interesting paradigm we're on with AI, but anybody who says they know exactly what businesses are going to work is really making that up. Let me take a look at different sectors and look at the year to date performance. So, the number one sector based on year to date performance is communication services. And the biggest companies in there are Meta, Alphabet, Netflix, those types of businesses. It's up 10.7%. Great return year to date. It's phenomenal. Information technology, no giant surprise, is up 10.3%. Financials is up almost 7%. So that's really good to see that financial services, banks, and those kind of companies are doing better. Last year they had a really rough time, especially banks, but it's good to see that they're doing well. The S&P as a whole is up 6.8%. Healthcare is right there at 6%. And I happen to believe that healthcare stocks are a really good place to be investing for value. I think they were beat up last year. They've had fallen behind. I think they have very good value propositions to a value investor like myself. Industrials, I think it's a good place to pick certain companies. I'm buying into 3M as an example, and I think they have a good, solid value proposition. And from there, we've got other sectors. I will point out that real estate's really been lagging, as well as utilities year to date. I wanted to take a closer look at the technology space and highlight the semiconductor industry within the technology business. And year to date, it's up 28.8%. Just phenomenal. Nvidia's in there, Broadcom, as well as AMD. And those companies are just off the charts. So it's really great. Now, semiconductors are cyclical. I cannot imagine that the demand on GPUs as well as semiconductors, especially the ones related to AI, that is a consistent demand curve. I think it's a one time, maybe a couple year revenue event. And then where's the rest of the revenue going to come from? Where's the sustainable revenue coming from? I heard a really good comparison from the telco or the broadband business when we had the internet explode and so many people got online and it seemed like, man, we're going to need so much bandwidth. So it became pretty hot to invest in companies that were putting down fiber and putting down these networks of broadband. They became really popular investments. Stocks really went up. Well, that space in particular went from we don't have enough broadband to we have way too much of it. And those stocks have plummeted and they never recovered because it was somewhat of a one time event. Once we had the networks built, we were done. So I would say that we don't know if AI is going to be hey, we're going to have to refresh the technology every year, every 5 years, every 10 years, every 20 years. Once you build a large language model, is it done? All those things remain to be seen. Are we going to build it out over the next 12 months, 12 years? There's just a lot of ifs. So I expect the semiconductor industry for the stock prices to really fall as soon as late 2024, maybe into 2025. But I continue to believe that semiconductors are cyclical. I owned Broadcom in 2023. I saw it go off the charts. And again, I sold the stock and have been seeing Broadcom continue to go up, which is phenomenal for Broadcom. Now, I checked the box on not being greedy. I took a great gain. I got a good return from that investment, but it is somewhat of a paradox to see the stock continue to go up. And I look at it and go, well, I don't know how much of that is artificial, just the AI hype. And for all I know, I'm completely wrong. But and most people are agreeing. The people that I listen to and the people that I listen to on AI, are agreeing with the concept that, hey, we don't know who the winners and losers are. And all this buildup of GPUs and semiconductors, hyperscalers, data centers, it's a one-time buildup. And then other budgets will go down for other chipsets. So it's going to be interesting to watch the semiconductor space. I don't know how long this rally is going to keep up, but I'm going to revisit this through 2024, and I'll share that analysis with you on my channel. So, what am I buying? What am I selling? Before I jump into what investments I'm buying and selling, let me just remind you that I do this channel just for entertainment and educational purposes. I'm not recommending you buy anything that I own or anything I covered, frankly. It's just for you to hear one more investor share what they're doing with their investments as I succeed and fail in my investments and how I see the stock market. Now, the first thing that I'll mention that I'm selling is bonds. I've built up a nice bond portfolio. Bonds are paying really good returns, and I've done really well with bonds from a low risk, good yield perspective. And I'm selling out of bonds that have a short term maturity, and I've got that capital really growing and getting it ready for the next big thing. I'm selling out of large market caps that don't have a big, strategy. They don't have a big growth trend. They're just kind of hanging on. An example is Comcast. I owned Comcast. I sold it recently. It's a good company. It's a diversified company, but I don't know that they're going to be able to compete directly against Netflix. That's just one of their businesses. But, if you look at Disney, Disney's really been failing. So mega caps like that don't have kind of a lot of momentum and are number one in their markets, I'm getting out of those types of stocks, Comcast being an example of one. I'm also selling out of overpriced stocks. I mentioned Broadcom earlier, and it's one of those where, geez, the stock price has gotten so high. You have to be super optimistic about Broadcom's business going forward for like the next 10 years to really think that the stock price is being sold at a discount. And I'm not a um, optimistic value investor. I'm a value investor. I'm happy to pay a reasonable price for a great company. I'm really willing to do that, but I'm not going to pay an unreasonable price for a great company. I think that is a mission to lose money. And for all I know, Broadcom sustains their price and becomes even more valuable, but I would be surprised if that happened. History repeats itself, and companies like Broadcom tend to come back to earth with their stock prices. So I'm selling out of really overpriced stocks. What am I buying? Small and medium cap stocks look really interesting to me. And the ones that I really like are ones that have great ideas. And for example, Airbnb has been one of my big winners. Airbnb is clearly the number one home sharing site around the world. They continue to grow at a phenomenal rate, great cash flow, and they're number one. And people would challenge that. Oh, well, Booking is also good. Yeah, they are good, but they're not number one. Airbnb is. And Airbnb is just continuing to accelerate. Uber. Uber is a great winner for me. Again, Uber is number one in the ride sharing space, and they're getting into food delivery and other things. But I really like having companies that, have momentum. They have proved to be valuable companies. They're generating free cash flow, and they're just going to get bigger. So that's the kind of recipe that I'm looking for in small and medium cap stocks. I'm also taking chances on smaller stocks. I'll give you one example, Chegg, CHGG. Now, I'm taking a chance on them because if I look at their AI strategy, it's really solid. They're building a large language model that's going to serve students. I think AI serving students and giving them really accurate information that they could use in their educational journey is a great idea. And so that's an AI stock that I'm buying that is currently being really discounted. It's really beaten up, frankly. So I'm taking chances on small stocks like that as well. I'm also looking across sectors that I believe are discounted. Healthcare being at the top of the list, and healthcare has been doing well this year. So I'm picking up, pharmaceutical stocks, healthcare payer stocks that are doing well. Cigna's been a big winner for me. Financials have been doing great. Banks are really doing well. So I'm glad I bought those, as well as some others. Even PayPal is beginning to take flight. I'm a PayPal stockholder. So financials are doing well. And then I'm really selective in industrials. I think the industrials are going to begin to pick up. I heard a report today that some chemical companies are beginning to see growth, which is a signal that our economy is beginning to grow, especially around the manufacturing complex. So that's where I'm buying stocks and investing my capital going forward. No matter what stock market we have, there's always companies that are discounted and are good investments. Right now, we're in a stock market where prices have been going up over the last 16, 18 months. It's really fun to see stock prices go up, but it just makes it a little harder to find those diamonds in the rough where you can find a company that's discounted, that isn't being covered very closely. And then when investors do realize that, hey, that's a good investment, that stock goes up. And I'm hoping that I find those in today's market. Now, since the market's been going up for a while, it would not be a big surprise if we had a big correction. A big correction because some of these stocks, especially around AI, are really, really expensive. And I think once you get to the tipping point and some stocks begin to go down, it'll pull other stocks with them. That would be expected, that based on sentiment and momentum, we could see a nice 10, 15 point percent correction in the stock market over the next couple of months. That wouldn't be a big surprise. It would be a big surprise if we just continue to go up and to the right for the rest of 2024. Like 2023, we will see ups and downs. In the middle of 23, we had a pretty good, I'm going to call it correction mid-year. And then we ended the year of 2023 on just a great run to end the year. So I appreciate you watching the video. And I'd love to hear your comments on what you're seeing in the market, what you think is a really good investment. And please subscribe to my channel, and please like my video. I'd really appreciate that. With that, let me wish you the best of success in investing in 2024.